No.
Hello, everyone. Thanks for joining us today, and welcome to this educational presentation where today I want to talk to you about the perfect trading strategy for volatile markets. And this is going to be a great class today because you're actually going to get the entry rules to this strategy. This is a strategy that we teach to our students around the world and that they pay good money for, but I'm going to give you actually the entry rules to this so you can start using this as early as today if you'd like. Now, let me give you an older example here to show you how well this works. Let's look at this older chart in IDXX, okay? Obviously, in this example, it's in an uptrend. But let's say you missed the trade or for some reason you didn't get in, or you're thinking to yourself, wow, is it too late to get in? And maybe you go to that website or that chat room and they tell you that it's actually overbought. So you say to yourself, well, instead of buying this, maybe I'll sell it right here. And that way, when it comes down all the way down to the current lows, I can buy some, cover my short, which I made some money off, maybe some puts, and then I'll go long at that level, at lower levels. So you have a plan in place. Well, with the rules that I'm going to be teaching you today, you would not have sold on this so-called overbought scenario. In fact, on that exact same bar, this strategy would have generated a buy signal. And potentially, you could have captured upwards of 62 points coming into the next 2 or 3 weeks. So this is what we're going to be talking about today, the perfect trading strategy for volatile markets. And everything you're seeing today is displayed coming from our platform. This is the platform I developed with Pro Trader Strategies, the PTS Primo charting platform that actually teaches you how to trade. So welcome once again, everyone. My name is Stephen Primo. I am the president and founder of Specialist Trading. I've been trading now for 47 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. If you're not familiar with what a specialist is or does, because there aren't a lot of them around anymore with the closure of a lot of the exchanges, if you ever Google those old pictures of the trading floor and you see those gentlemen behind those large wooden podiums that were making weird hand signals, those were specialists. They specialized in making a market and roughly about 50 or 60 stocks. So before the advent of electronic trading and high-speed computers, in the old days, let's say you wanted to purchase a stock, let's say IBM. What you would do is you'd call your stockbroker. The stockbroker would take the order. He would call the floor broker for that company. The floor broker would take the order to buy 100 shares of IBM, let's say, and then he would walk over to the person who specialized in making a market in that particular stock. So that's what I did. I made markets once again in stocks like IBM, Waste Management, US Air. I was a specialist during the crash of 1987 and the bull market that followed. I've traded straight up markets, straight down markets, sideways markets. And in my nearly 5 decades of trading, I've traded just about every technique, every system, every method you can think of. Even if you think it's brand new, most likely it's been around before, it's just been rebranded. So I know what works in terms of consistency, and I know what doesn't work. So roughly 15 years ago, I teamed up with my sister company, Pro Trader Strategies, and we formulated Specialist Trading with one goal in mind, and that was simply to educate traders around the world, all of these things that I've accumulated in nearly 5 decades that actually work, that have consistency. You see, there's so many things that so many of us, myself included, when I first started trading, that we feel like these are going to make us, millionaires in a matter of months, and these are the things that the perfect strategy, and they really have no consistency to them. I don't want you to fall into that same path. I know many of you may be suffering with your trading right now, but I share with you things that have worked over time that can really help your trading. Hopefully, you'll see that in today's educational presentation. Now, before we begin, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this strategy, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company only, all examples are strictly for educational purposes only. Now, a lot of our prospective students and even our students say, well, Steve, how do I get more education? I'd like to get more education even on a daily basis. Well, feel free to follow us on Twitter or X, however you like to name it. Every day I post anywhere from 5 to 7 different snapshots of signals or triggers that our methods and strategies have generated. I also post a lot of bits of financial wisdom. So there's lots of great free education on a daily basis. Please feel free to follow us on Twitter. And remember, we are a little bit different from other presenters or other webinars you may have gone to, in that our sole purpose is simply to educate you. See, it's our philosophy that a good mentor does not trade for you, does not furnish you with signals or tell you what the best stock is to buy or tell you what the market's going to do. We teach you those things so that you can decide on yourself. If there's one thing I've learned in my nearly 5 decades of trading, it's that the only way to become consistent, the only traders that are still around since my days on the floor, are the ones that make their own trading decisions. They don't rely on someone else to tell them what to do. They don't listen with bated breath for the earnings reports to come out of the jobless claims. They have a plan in place that they've studied and fit to their own needs, and they simply follow it through. They apply it properly. Those are the ones that have not just had a couple of good years, but maybe a couple of good decades. Well, this is what we want to instill in you, the same way I was taught these things when I was first struggling some 47 years ago, and hopefully we'll be able to carry your trading out through a good decade or two, okay? Now, before we begin, I know this is being recorded, so if you have any questions, please wait till the very end of the class. I like to take the questions at the very end. I promise I'll get to each and every one of them, but I have a snapshot, or I should say I have a lot of snapshots for you today, and I'd like to go through them rather than stop at every snapshot, okay? And this is being recorded, as I said earlier, so if you have trouble writing something down, or you wanted to copy a formula or something I'm going to be giving to you, a setting, don't worry. Most likely you'll be getting a link to this recording, and you can get it later at your own leisure, okay? So if you do have questions, let's just wait till the very end. I promise I'll get to each and every one of them. All right, let's begin. We're going to be talking about strategy 3A. This is a method that we teach our students around the world in roughly over 115 countries. It's a very good strategy to trade. And let me share with you some of the highlights of this particular method. It's a continuation strategy. Now, for those of you who aren't familiar with what that means, a continuation strategy looks to buy in an already established trend. In other words, if it's been going up and the strategy generates a buy signal, well, then we just buy at or near the highs, because odds are we're going to squeeze a little bit more profit. In other words, a continuation strategy likes to buy high and sell higher, or we like to sell short low and cover lower, okay? Now, the way we do this is by applying a unique Bollinger Band setting. Now, usually this setting is reserved for the students who purchase this method, but I'm going to give it to you for free today. Now, this Bollinger Band setting helps us to identify these quick and powerful trends. You can apply this strategy to virtually any market, any time frame, and any direction. I know we have a lot of traders who like to trade multiple markets, different time frames, different markets. That's okay. Nothing changes because, let's say, you go from stocks to currency pairs, or from currency pairs to crypto. It makes absolutely no difference. Now, the first thing we tell our students is to learn the strategy like the back of your hand, but paper trade first. So even though I can't divulge all the rules like the stop placement and the exits and money management, you're going to get the entry rules, but I want you to paper trade first, because I know after you see some of these examples, your eyes will light up like, this is amazing. I'm going to start trading this the minute this guy gets off the internet. No, I want you to paper trade first, because I can almost guarantee that you won't see the same results, or you'll lose money. This happens so often, people jump in too quickly. And when I ask to see their work, most likely they've entered totally wrong. They haven't actually learned the rules. They haven't studied what we taught them. So please paper trade it. Wait till you get this recording and make sure that you fully understand the rules for entry. Now, our edge with this strategy, along with all of our methods we teach as specialist trading, is based in consistency. I know a lot of traders think consistency means, well, that means you have a lot of winners, right? That's not what consistency means. Actually, consistency is an awareness that you will have losses from time to time, and that's okay. Every great trader knows that you will have losses. There's nothing wrong with that. But you want to trade a consistent method, because a consistent method is able to recoup those losses, often on the very next setup. So the consistent method is sort of like a two-step forward, one-step back approach. The one step back being the small loss, the two-step forward being the wins that recoup those losses. And that's what all of our strategies, including strategy 3A, are. They're extremely consistent. Okay, so let's give a little refresher course in Bollinger Bands. I know probably most likely all of you have at one time either applied or are currently using Bollinger Bands. Let's give it a little refresher course. Bollinger Bands are three bands, three lines, okay? Now they're based off the middle, which is simply a 20-period simple moving average. That's all it is. But then you have an upper band above this and a lower band below it. Now the standard setting or the deviation, and without going too much into the inner workings of this, I don't want to spend time really explaining the inner workings of what Bollinger Bands are, but the upper band deviation simply means the distance it is from the moving average on the upside, and that's set at +2. And the lower band is the exact same thing, except below it, now it's -2. So these are the standard Bollinger Band setting. The moving average is a 20-period simple moving average. The upper band deviation is +2. The lower band deviation is -2. And if you apply that to this generic chart, this is what it'll look like. As we see here, this line in red is the 20-period simple moving average. Here's the upper band right here, and this is the lower band. Okay, now there are a number of ways to use this. This is a great tool, a great indicator developed by John Bollinger, but we're going to change things a little bit to help formulate strategy 3A. All right, now these are the proprietary settings. And remember, if you don't get to copy these down or you don't understand it right away, don't worry. We will address it later. And also this is being recorded so you can watch it again and copy it down. So for the proprietary setting, we're going to leave the moving average, which is the middle band, exactly the same at 20, a 20-period simple moving average. But what we're going to do is change the upper and the lower band deviations. We're going to go down to a fraction. So the upper band deviation used to be at 2. We're going down to +0.382, okay? And the lower band used to be at -2. We're going up to -0.382, okay? So that's the setting now. Now, regardless of what platform you currently use, you should be able to adjust this. Contact your tech support if you're having difficulty. They can set it up for you, but you should be able to edit your current setting, the standard setting of the Bollinger Bands, and go to these levels. Remember, keep the moving average the same at 20. We're just changing the upper and the lower band deviations at +0.382 and -0.382. So if we look at the standard Bollinger Band settings, here's the way they looked before, and here's the way we're changing them, okay? Now, a number of our students especially say, well, Steve, I don't have the ability on the current platform I use to change these settings. Can I just use Keltner? Can I just use envelopes? Listen, you can if you want to, but I've experimented with them for the last 4 decades, and they don't get the same results. So I really would highly suggest using the Bollinger Bands and changing them to these settings. I wouldn't apply this to Keltner channels or to any other indicator other than the Bollinger Bands, okay? So how is this going to help us? Well, it's going to be extremely important in identifying where we enter into these trades. All right, so let's look at the strategy 3A buy entry rules. Now, we're just to keep this presentation, brief. We're not going to go into the sell rules. I will show you sell examples, but just to keep it brief, because the rules are the exact same for sell, so we'll just turn it upside down. And I'll show you a number of sell examples as well. But let's go over the buy entry rules. We're going to take it step by step so that you fully understand this process, okay? And remember, if you do have questions, I will take them at the end. We don't want to stop and really take too much time and lose track here. All right, step 1. Obviously, you want to plot the proprietary Bollinger Band setting on your chart. Remember, you should be able to edit this, whatever platform you're currently using. But let's look at this older chart here in Tesla. This is an older chart. Later on in the presentation, I'll show you a more current chart. But obviously, we've been going higher, right? But what happens once again if that guy in that chat room or that guy on TV says, oh, it's gone up too quickly, too high, all the indicators are overbought, so you've got to sell this? Well, this is how easy it is to apply strategy 3A using our platform. Because once again, we have strategy 3A right here on the PTS Primo charting platform. Once you click that on in the drop-down menu, just click on indicator, and it's already pre-formatted for you. There's nothing you have to edit each and every time you want to look at a new stock. There's nothing you have to contact your tech support. It's right there. Everything is right there on the PTS Primo charting platform. So it's already pre-formatted, okay? So there's your proprietary setting of the Bollinger Band. Now we go to step 2. We want to identify 5 consecutive price bars that close either on or above the highest Bollinger Band. Okay, let's look and see what that means before you get confused here. Okay, excuse me. Here we have the highest Bollinger Band, right? And we see here that we opened below and we're kind of touching it, but we want to find 1, 2, 3, 4, 5 bars that close either on or above, and all of these bars did. You see that? Even though they touch, this one touch, it makes no difference. All that matters is that it closes above and that you have 5 consecutive bars. So this is getting close to our setup, which brings us now to step 3. We're going to enter to buy, not at the market, but only when price trades one tick above bar number 5. You notice I underlined trading. This is where a lot of students, once again, they jump in too quickly, they don't follow the rules. Price usually has to trade there. It doesn't have to close above bar number 5. This is where a lot of students say, well, Steve, it didn't close there, so I didn't buy it. No, it only has to trade one tick above bar number 5, 1 unit of measurement. So as we see here, we have 1, 2, 3, 4. Here's bar number 5. And so this is the area where we want to buy. It just has to trade there. So we could open, trade higher, and close much lower. That's okay. That was your signal to get long. So let's see what happens on the very next bar. Well, the very next bar went lower. So at this time, once again, students who didn't research the rules say, well, it didn't happen, so I guess the trade is negated, right? It's over. No, I mean, sure, if you want to, you can move on to something else, but the trade is still valid. The setup is still valid. What we teach our students is, unless price comes all the way down here without trading one tick above bar number 5 and closes below this highest Bollinger Band, the trade is still okay. The setup is still okay, even though you haven't entered yet. So you can have 2, 3, 4, 5, 10 bars before it trades there, or else it finally comes and closes below the highest Bollinger Band. So let's see what happened on the very next bar. Well, the very next bar, it did trade above bar number 5. Remember, in this case, it closed there, but it didn't have to close. All it has to do is trade there. So that's your entry point. And look what happened. In the next week or two, the stock was up 115 points. This is what we mean by a continuation trade. This is a great strategy that identifies if most likely we're going to continue to go higher. So that it's basically telling you there's a little bit more gas left in the tank for it to go higher. We're trying to capture these very extreme volatile markets. All right, so now that you understand the process, remember the cells are just the opposite, so don't worry, and we'll show you a number of examples here. Let's go and show you some more strategy 3A examples. All right, let's look at AVGO, okay, Broadcom. Someone looking at this would say, well, Steve, don't really have much idea. I'm kind of waiting for the earnings to come out. They're not supposed to be very good. And as you can see, we've been going lower. So I don't really have an idea about this. This is why, in our opinion, our teaching philosophy, why most traders fail. Because you're basing your trade off of an outside source, either what some guy says on TV or waiting for some jobless claim number or something. Trust me, I know this from firsthand experience. I'm not just trying to be condescending. This is the way I used to trade my first year or two on the floor. I was taught the exact same things. Okay, wait for the earnings, wait for the numbers to come out, the economic numbers. Listen to that guy on TV. We didn't have chat rooms at that time because there was no such thing as the internet, but we had a lot of newsletters. So listen to what they said. And I did all those things the way I was taught. And guess what? I couldn't make a dime. Because once again, there's really no consistency in those things. The only consistency is in the chart in front of you. So what is the chart telling us? Well, for that, we have to apply this proprietary Bollinger Band setting. So on our platform, we make it simple. Click on Strategy 3A. In the drop-down menu, click on Indicator. And guess what? Well, at this time, it's telling us, well, sure, we are below the lowest Bollinger Band, but we only have 3 bars below. We need a total of 5 to have a sell setup. And let's see what happened. This was just last month. Coming into the middle of last month, all of a sudden we started to go a little higher, not extremely higher, but we had a nice little upward movement. But more importantly, what do we have here? We have 1, 2, 3, 4, 5 consecutive closes above that highest Bollinger Band. Now remember, this bar intersected the highest Bollinger Band. This bar opened below and intersected. It makes no difference. All we're looking for are 5 closes. It's okay if it touches that top Bollinger Band. 5 closes either on or above. So what does that tell us? We don't have to worry about what the earnings are going to come out and be. All we have to know is that this is a buy setup, but as long as it trades 1 tick above bar number 5. So that's all we're going to do. We're going to wait to see if it trades there. And look what happened. On the very next bar, it gapped up above. So this was our trigger to either buy, or if we figured, hey, this opened up a little bit too high for me, we don't have to buy. This is not a system. Remember, you're in charge. You make your decisions. We don't. We just give you the information so that you can, take charge of your trading. But let's say you wanted to, even though gapped up, well, you would have entered right there, okay? And look what happened. This was just about 3-4 weeks ago. The stock went up 35 points in the next 3 days. Okay? You think this could have helped you? Now, did I look at any earnings? Did I look at any fundamental news? Did I listen to anybody in the chat room? No. You're learning how to take charge of your trading and make your own trading decisions. This is how you become a consistent trader. The one thing I've learned in 47 years of trading. All right, let's look at this example. All right, we've all seen this last week, right? This is CrowdStrike. Now, coming in to just last week, we see here that the stock is kind of going sideways to firming up. Now, we had a number of students that were thinking, well, Steve, I am a real big, institutional type of trader. In fact, there's major institutional support right here. They're keeping the stock up. So I was always taught you go with the institutions. After all, they're the big money, right? That's where all the big money is. Well, listen, you can do whatever you want. As a mentor, I'm not here to tell you what not to do. I'm just here to show you what works. And in my own personal experience, I used to trade with the institutions. I traded 50, 60 stocks, and the institutions would enter orders in my book, sometimes orders for 1 million shares, sometimes even more. And I can tell you from personal experience, they had the worst track record of any other traders I dealt with. They were constantly losing money and being wrong. And it didn't matter because they had the big bucks, right? So I would never put my faith in trusting whatever the institutions do. I don't care how many shares they had to buy or sell. So even though you may think, oh, there's major institutional support here, I would rather listen to the source. What's the source? That's the chart in front of me. And the chart in front of me is telling me one thing. Once I apply the proprietary Bollinger Band setting, click on indicator, it's telling me I have bars below the lowest Bollinger Band. In fact, I have a total of 5 bars. So it's telling me, sure, listen, it may go up, but I have a setup to go short. If it doesn't trade here and goes up, okay, then I'll change my mind. But if it trades here, this is actually a sell setup. Now, look what happened the very next day. This was on the 17th. It would have been a good idea to go short, to buy some puts, whatever you wanted to do. Remember, we don't tell you what to buy or what to sell. This is not an options course. We're not a stock trading course. We're not a crypto course. We just give you things that work, and you can apply them to any way and trade them any way you'd like. So if you'd like to get some type of spread strategy with a downward bias, if you'd like to actually short the stock, it's up to you. But this was before the news came out about what happened with CrowdStrike, and look what happened. 90 points you could have made to the downside. Remember, none of our methods are based on news, institutions, are based on fundamentals. They're all based on market behavior. And strategy 3A is a great, great strategy to trade based on market behavior. This was, you could have taken advantage of this well before the news came out on CrowdStrike last week. Okay, let's look at Tesla. This is the current chart of Tesla coming into this month. Someone looking at this would say, well, Steve, there's major resistance here. This is Fibonacci resistance. We can't buy this because, I'm a big student of that. Once again, I'm not going to tell you what you can and cannot do. We don't use any Fibonacci support resistance. We just really look at market behavior, market patterns, okay? And so you may think there's resistance, and possibly there is, but what is the chart telling us? Click on strategy 3A. And even though it appears that there's resistance there, where are the majority of the bars closing? They're closing above the highest Bollinger Band. In fact, we have 5 right here in succession. So what we want to do is buy once price trades there. Now we have the next bar. We never traded there. Now, if the next bar comes down and closes below the highest Bollinger Band, well, then you're right. All the rules are off. It's a negated setup because we have to stay above and close above that highest Bollinger Band. But look what happened. You would have entered right here off the very first day, you had a profit. You could have sold there if you wanted to, even though we have upwards of 5 or 6 different settings to go to exit the trade. It's up to you. Remember, you're in charge. But it would have been wiser to stay in the trade, because look what happened in the next couple of weeks. Tesla went up 80 points. All, once again, without the fact of looking at support and resistance, institutions, earnings, all of that. Remember, I used to trade that way. So I'm not saying this to put down anyone or to say you're trading wrong. I'm just saying this from personal experience. I couldn't make a dime for nearly 2 years, my first couple of years of trading, because I was doing those same things. I was lucky enough to have some mentors on the trading floor who saw how much I was struggling. And they said, Steve, what they called useless noise, all the things I was focusing on, they said, just get rid of that. You don't need to focus on that, okay? Sure, if you're an investor holding on to something for 5, 10, 20 years, sure, you need to know about the inner workings of the company and what direction the economy is going. But if you're holding something for a couple of weeks, even a couple of months, there's no reason to look at that. So over 47 years ago, I stopped looking at all news. I haven't looked at any news in that amount of time, and I'm living proof that you don't really need it if you don't want to. But if you need it, then go ahead. By all means, go ahead and continue to use it. All right, let's look at MDB. This was just about a month or so ago. Not much you can tell from this. Let's say you were interested in purchasing this, but maybe you step away from trading for a week or two. Maybe you went on vacation, and all of a sudden it goes lower. But at this point, you're really excited because that special indicator you purchased for like $10,000 is telling you that we are tremendously oversold. So it has never been this low before, this quickly. You've got to buy it. You're going to miss an opportunity of a lifetime here. All right. This is why most students fail. We're relying on things that really don't have a lot of consistency. What is the market telling us? Click on Strategy 3A. And now we see we have a total of 1, 2, 3, 4, 5 closes below. So sure, the next day we could gap up and go straight up. But until then, we actually have a setup to go short. So I'm not going to be that excited about going long right now. I want to see if this is triggered yet. And it was on the very next day. This was at the end of May, coming into June, coming into last month. Okay. Now look what happened. Remember, none of this is based on any fundamental news. We don't care about the fundamentals of the company. We don't care about what's going on economically. We're not interested in any of that. We're just following market behavior. And market behavior told us that this wants to go lower. So you could have gotten short right here. And look what happened. The next day, some news came out or something happened where this stock gapped down tremendously, and you could have potentially captured in the next couple of weeks 110 points. You see how simple trading can be? Trading is really simple. It's the trader himself or herself that makes it more difficult than it has to be. You see, we get in our own way. I know, once again, this is the way I used to trade. I got in my own way all the time. Once my mentors taught me to let go of this stuff and get out of your own way, then trading started to become more consistent and was a lot more simple. Let's look at CTAS, all right, Census Corporation. 5 closes above, 1, 2, 3, 4, 5. Here's our entry point. And we're not long yet, even though, a lot of traders would say, well, I just buy at the market, Steve. Well, I wouldn't do that, because many times it will go down on the next bar and then continue lower. And you say to yourself, why did I buy it? So we want a little confirmation that's going to trade at these levels right up here. And it did. Now, once again, here's where most students fail. They say, but Steve, it didn't close there, so I exited my position with a loss. Why? Remember, all it has to do is trade there. And in the course, we teach you all the different stop placements. We teach you exit points. So you would have still been in this trade. Your stop would have been in place. Your exit points, whatever you decide, would have been in place. And that would have been a good idea to stay in, because you could have potentially captured 48 points in just 1 week, okay? All right, let's look at an entirely different market, entirely different time frame. Here's the dollar-yen Forex, or for any of you Forex traders, and it's a 4-hour chart, all right? A lot of students say, well, Steve, yeah, this is great because they're all going in the same direction, but what happens when the trend changes? For this example, in the dollar-yen, we're going straight down, and then we quickly reverse and go straight up. Don't you, have major losses, or doesn't this, throw this whole strategy, out the window? Remember, as I said in the beginning, all of our methods are extremely consistent. Consistency means there will be losses from time to time. So no strategy has winners 100%. If anyone ever tells you that, you should run, because I've been trading for nearly 5 decades. I've never seen a method that is correct 100% of the time. And that's okay. It's not natural for something to be correct 100% of the time. But in this case, you would still apply the same process. You would click on Strategy 3A, click on Indicator, and here you see the proprietary set of the Bollinger Band. There's nothing you have to edit. There's nothing you have to change for each and every different market. And then you go through the same process. Now here we were originally above, but all of a sudden we went below. 1, 2, 3, 4, 5 closes below. So that was your entry point. And in the next week or so, you could have potentially captured 400 pips. You had 400 pips to work with. That's roughly $4,000 potentially per unit. That's not a bad little scenario, right? But look what happened. Then the trend changed, but the same process applies. Well, we have 1, 2, 3 up, 4 went below, so we have to start all over. 1, 2, 3, 4, 5. So the same process applies. We would have gone long here, and potentially we had another 400 pips to work with. Now, a lot of students say, well, yeah, but Steve, I would have had to buy at the very low and sell at the very high to make 400 pips. Okay, so let's just say you took half of that. Let's say you only made 200 pips. All right, so that's $2,000 per unit, okay? Let's say, you only took a quarter of that. So you took 100 pips, $1,000. You still have a lot to work with there. And ultimately, it's your choice. We give you all these different variables for exits. How you decide to exit with a profit is entirely up to you. Remember, our philosophy is we want to put the power back in your hands. We're not here to tell you, buy this stock, buy this currency pair, sell it here, place your stop here. No, that's up to you to learn. What we do is we provide you with all the different variables so that you feel comfortable. Oftentimes, we've been called more like a smorgasbord, because think of it. When you go to a buffet restaurant, let's say, you have 2 different people in the same buffet. Now, one person goes in that buffet line and gets a steak and has Jell-O with it, and orders a glass of wine, maybe some mashed potatoes and a salad. The other person orders the exact opposite, gets some fish, maybe has some soup, orders a glass of beer. Now, are they still both going to, is one meal better than the other? No, they're both going to enjoy their meals because they formatted it particularly to meet their needs, what makes them happy. But they're both going to leave satisfied. It's the same way with trading. 2 traders can get in at the very same setup, but have entirely different results. And it should be that way. No 2 traders should ever trade alike. So our job as a mentor is to provide you with this information so you can make your own trading decisions. All right, how about any day traders here? Okay, here's a 5-minute chart of the spiders. And if we look down here at the very bottom, guess what? This was just a day or 2 ago, July 24th. This was on the close of July 23rd, okay? Just a few days ago, this was on the close of Tuesday. Now, it looks like we're closing and we're going to reverse and going to go higher. All right, so maybe you said, hey, I should buy there, right? For the next day, maybe you would like to hold positions for a day or so. Well, if we applied the same process, we see there that price was still below the lowest Bollinger Band. And if we counted 1, 2, 3, 4, 5, we actually would have gotten short right on or near the close. 5 or 10 minutes before the close, you would have been short the spiders on a 5-minute time frame. Now, if you wanted to hold on to the position overnight, you would have taken this trade. Obviously, if you're not a person that likes to hold on, you would not have taken this setup. But that would have been a wise thing to do because we all know what happened yesterday, okay? Trading a 5-minute chart, you could have potentially captured 13 points in the spiders, the ETF that represents the S&P 500. Now, if you want to see what that came out to roughly on Dow Jones points, well, remember yesterday was down roughly 500 points. Isn't it funny how we knew, even on a smaller time frame, to go short the market? That's how powerful Strategy 3A is and how it can help you in any market in any time frame. Okay, let's look at this last chart here. Here's a weekly chart of Costco because we showed you a currency pair, 4-hour currency pair. We showed you a 5-minute intraday chart of the spiders. Let's look at a chart for swing traders or investors, right? Now, here's a weekly chart of Costco coming into this month, going all the way back to 2023. Most traders look at this, traders always like to play the blame game or the victim, like, oh gosh, I missed that. How would I have known though? I didn't know. I mean, my stockbroker didn't give me any ideas about this, and I didn't know this was going to go straight up. Well, that's because once again, you're relying on outside sources, just the way I did 4 decades ago, that have no high levels of consistency. How could strategy 3A have helped you even on a weekly chart of Costco going back over a year? Well, same process. Click on strategy 3A on our platform. In the drop-down menu, click on indicator, and you would have seen the Bollinger Bands. Now here we have some 1, 2, 3, but on the fourth bar, it closed below. So there's no count there. Now we start over again. 1, 2, 3, 4, 5 bars closed above. So that's a buy setup. And that was in November of 2023. Now, we didn't just buy at the market. It had to trade above the high of that week. All right, 1 or 2 ticks above. And it did. The very first week of December last year, we could have entered and potentially captured 285 points, provided you were still in the trade. But either way, let's say you got out at 100 points. Let's say you got out making 50 points. Either way, those are very nice numbers you could have potentially made. Once again, we didn't look at anything with the inner workings of the company. We didn't look at the finances. We didn't look at the direction the CEO wanted to go in. We didn't look at the earnings. Have no interest in that. We didn't look at what's going on economically in the world. There's going to be a recession. Who's in office? Makes no difference. The market tells you everything you need to know. Remember, I used to trade the exact same way. In fact, I made markets in roughly about 60 of my stocks. So it stood to reason I needed to know about the inner workings of each and every one of my stocks. That's the way I was taught. I need to know all the earnings estimates. I need to know what's going on economically. I had to know all that information. So why was it that even though I knew all that information, I couldn't make any money my first nearly 2 years of being a specialist? It's because there's no consistency in that. And remember, if you feel you must use that information, by all means, go ahead. But none of our methods apply that. They're based in simplicity. And you see how simple this is. It's not complicated. Anyone can do this. Everyone gets the same rules, whether you've been trading for 30 years or 30 minutes. Everyone gets the same basic rules because they're that simple, okay? Okay, let's recap what we shared with you today. Strategy 3A is a continuation strategy. As you saw, we're looking for a trend to already be established, and then we want to jump on board that established trend. This means we may be buying towards the high, but that's okay because the consistency is that it's most likely going to be going higher. Now, it does this by applying a unique Bollinger Band setting. We already shared with you what that is today. Remember, don't worry if you didn't copy it down. It's in the video. You'll be able to copy this down and watch this at your own leisure, okay? Now, it's designed to trade these quick, powerful trends in any market, in any time frame, and in any direction. We showed you not only daily stock examples, but we also showed you currency pairs, 5-minute intraday trading, as well as swing trading or weekly trading. Please, you have the entry rules now. You know what they are. Learn the strategy like the back of your hand, though. Paper trade first. I know, once again, a lot of you are thinking, oh, I'm just going to jump in. Gosh, I'm going to start trading this right now. I can almost guarantee you're going to lose money because you're not going to really fully understand the process. You won't have the proper countdown. You won't look at 5 bars closing above or below. You'll enter at the market instead of waiting for it. It's just the way traders are. We want to jump in too quickly and look for some get-rich-quick scheme where you've got to follow the process. Remember, all of our strategies, all of our methods of specialist trading are extremely consistent. Consistency is an awareness that you will have losses from time to time. Perfectly okay. It's admissible. Every trader loses. That's okay. But you don't want to go into a sustained drawdown. How many strategies have you traded or $10,000 methods have you purchased or indicators? And sure, maybe they have a couple of winners, but then they go into a sustained losses, okay? That's not a consistent method. What you want is a 2-step forward, 1-step back approach. And not only is strategy 3A, but all of our methods of specialist trading are extremely consistent. So as we close here, ask yourself, do you think this strategy can help your trading for the remainder of 2024? Well, I think your answer would be a resounding yes. You just saw some current examples, but I even have a better offer for you right now. For all the attendees taking time out to come to this presentation, we have a very, very special offer. This is called our Secrets of a Stock Exchange Specialist video seminar. Now, some years ago, I was asked to be the head speaker at a conference in Colorado, where I spoke roughly for 3 hours. And here's the good news. They videoed this presentation and they recorded it. And this is what we have. We're offering you our video seminar. This is the recording of me speaking. And I spoke for 3 hours on many more high probability trading edges, things that I haven't covered today. I also went into which indicators not only to use, but the ones you should not be using when trading. I went into detail about the difference between a system versus a strategy, and we only teach and trade strategies. I also shared and revealed the #1 chart pattern that you should be looking for regardless of any method you trade. Even if you want to still trade your own method based on fundamental news, you should be applying this chart pattern to that strategy. I talked about the importance of being on the right side of the markets and a simple tool that can automatically identify if you are on the right side of the market or not. But here's, I think, what the best thing was about the 3-hour video seminar. I gave the complete rules, entry, exit, stop placement to one of our most consistent pullback methods. That's strategy #1. Now, if you're not familiar with what a pullback method is, pullback method is different from what we taught you today. Remember, we're looking for a continuation of trend. That means today, even if we bought towards the top, we were looking for it to go higher. And even if we sold towards the low, we were looking for it to go lower. A pullback strategy is completely different. We're looking to buy at the lows of an established uptrend. And we're looking to sell or go short at the highs of an established downtrend. Let me share with you what I mean here. Here's a chart in ARHS, okay, an older chart. Now, obviously, we are in an established uptrend right here, okay? Now, this is where a pullback method is different. A pullback method looks to buy at these lows, like right here, before it bounces back up. And then another low is created, and then it bounces back up. And then another low is created, okay? So that's the difference between what we taught you today. This is what strategy 1 does. So if you're the type of trader that says, listen, strategy 3A is great, but I have difficulty buying at those highs there. Well, strategy 1 is for you because it will generate signals at or near those lows. For example, on our platform, if you clicked on strategy 1, look where these automatic signals were generated. And these are auto-displayed on our platform right here, okay? Every one of these buy signals had a nice profit after the signal was generated. And this last one even had a gap up 2 days afterwards. Now, this can also work to the downside. If you like to go short or buy puts, someone looking at this would say, well, this is in Biogen. Well, we're kind of headed lower, Steve, but look, we have 1, 2, 3 days where we close up. That's a sign that the buyers are in charge, right? That's technical analysis 101. And we have kind of a reversal bar. We opened lower and closed higher. So I don't know, Steve, this should be going higher in my opinion. Well, what does strategy 1 say? Strategy 1 said that was a sell signal. This little bounce, even though it was just for a day or two, was telling you that that is a selling opportunity. And guess what happened? The stock fell 25 points in the next 4 days. Now, the beauty of strategy 1, once again, is that you can apply it to any market and any time frame. So this is a great method that you're going to be getting, once again, included in this 3-hour video course. This is our Secrets of a Stock Exchange Specialist video seminar. Okay, so let's break it down. Now, normally, this course runs for close to $1,000. It's advertised on Pro Trader Strategies website. They're my sister site. They're in charge of all the pricing and advertising. It's close to $1,000. That's how much information is jam-packed in this presentation, in this 3-hour course. But here's what we're going to do. For a limited time, we're not going to charge you $9.97. This is an amazing offer. We're going to discount this down tremendously, $37. But trust me when I say this is for a limited time only. This is not going to be for the next 3 weeks or a month. This may even only be till the end of the weekend. But this is a very, very deeply slashed discounted price. But think of it, $37. You can't even go out to breakfast or lunch, even alone, for sometimes less than $30 or $40. So think of it, for $37, you're getting close to 5 decades of tips, techniques, and a strategy that I've accumulated And that these are current things that I actually use myself in my current trade. But guess what? We're not even going to stop there with this 37 discount price. We have an extra bonus included. Here's what it is. Along with your purchase of the secrets course, you will receive a 50% discount on any other product we sell. So think of that. If you purchase the secrets course for $37 and you say, wow, this is amazing, you'll also get half off any other strategy, any other method, any other thing that we have on our product list for 50% off. This is a great, great bonus. So you have two things going for you, a tremendously slashed discount along with an offer to purchase any other method or technique we have for 50% off. A year from today, if you do not take this offer, you will have wished you had purchased the secrets course. Most of you probably in the last week have lost more than $37, probably just off commission costs alone. All right, think of it. You can get nearly 5 decades of information, tips, techniques, strategies that I've accumulated in my 47 years, to be exact, of trading for less than $50, $37 to be exact. And that comes along with a 50% discount on anything else. Here's how to take advantage of this. Contact my sister site, Pro Trader Strategies. They're in charge of all the discounts, all the pricing. I would give them a call at area code 310-598-6677. They have trading consultants manning the phones right now. They would be more than happy to take your order to the phone or answer any other question that you may have about our platform, about strategies, anything else. Remember, that comes with the 50% discount if you decide to purchase the secrets course. Now, the link you see at the very bottom is the link that will take you to the sign-up page as well as the info page for the secrets offer. It's not a live link, but I'm not sure if they're posting a live link on the Zoom page, on the chat page, but that you can copy that down or just copy and paste that, and that will take you to the link that will take you to the info page, okay? I believe we have about 10 minutes left. I'll take questions now. I'm not sure if you wanted me, David, if you want me to take them off the chat box, I can do that if you want, or if you're going to read them to me.
Yeah, if you just open the
okay.
chat box, you can see what people have typed.
Okay. Question, is the indicator included? It's included with the platform. And that's something you would have to contact Pro Trader Strategies. The indicator is pre-formatted on the platform, yes. Let me go back here. Does Strategy 3 also include in this offer, do you have your strategies for NinjaTrader? Yes, they do. Our methods can be transferred over to NinjaTrader. Once again, they can probably answer that better than I can, but this is included as well. And I know we can transfer over to most of the major different platforms. But remember, it's so much easier on our platform because you don't have to pre-format everything. It's right there, one click away. And you'll also get the buy and sell arrows as well. How good does this work in a very volatile stock? Well, that's the whole point of this. If you looked at the title of this presentation, this is called a perfect strategy for trading volatile markets. That's the beauty of Strategy 3A, because it does work. It's specifically designed to trade volatile stocks or volatile, whatever market you're looking at, okay? So it's a great, and like I said, test it out. If you have the entry rules yourself, it's not like this is a black box now. You can go format on your current platform the Bollinger Bands. You can go test it and see how it works on volatile markets. And I'm almost certain you're going to be pleasantly surprised and say, wow, this really does work. So you have the entry rules right there. But please, as I said earlier, please paper trade first. This is an amazing, simple strategy I've ever seen. Thanks for sharing. You're more than welcome. As I said, remember, as I said 47 years ago, I thought that the more complicated something was, the more valid it would be, and the more my success rate would be. If there's one thing I've learned in 47 years, it's the exact opposite. The more simple your trading method is, less rules, less looking at things, applying, that's actually the higher your consistency will be. Strategy 3A, along with all of our methods, are extremely simple, very, very simple. Maybe some with just 2 or 3 rules, no more than 5. And they're very easy to understand. And we go through everything with you in the course, okay? Let's see, someone say, let's see, I'm going back here. What percentage of all trades that shows 5 closing candles above, below the upper or lower Bollinger Band? This is a question I get almost every time. Are winners or losers? Okay. Can you show the winning trades in your direction? First of all, when you're asking about percentages, remember, I don't know if you came in late, but I went over and said no two traders should ever trade alike. Firstly, we are an educational company. We're not a statistical analytical company. In order to provide you with statistics, that means everyone would have to enter at the exact same place and have to exit at the exact same place. Then they'd have to place their stop at the exact same place. They'd have to have the same money management provided. And we don't believe in that. As a mentor, we want you to find your own way. I don't know if you recall, but I said two traders can take setups and have entirely different results. And that's what we actually want you to have. We initiate that amongst all our students. Because if there's one thing I've learned, it's that when you all are following the same thing, remember, you're taking yourself out of the game. You're basically letting someone or something decide for you. And in the very beginning of the presentation, I said, our job as a mentor is to provide you with these things so that you can make your own trading decisions. And if you're making your decision by deciding to enter at a certain spot and exit at a certain spot and place your stop at a certain spot, there's no way we can have statistics for each and every one. We have thousands of students around the world in every state in the United States and in over 115 countries. We can't make separate statistics for each and every student. And we wouldn't want to. We want you to find your own way. In my 47 years, this is the only way you become a consistent trader. So just take it from someone. I have in my past, when I was struggling, I traded systems. In the old days, I spent roughly about $5,000 or $10,000. This was nearly 5 decades ago on systematic tools to help me because I was struggling so much. And that would be comparable to spending like $25,000 or $30,000 today on systems, okay? And not only did I trade systems, but when I left the floor, I was offered a job to teach and to trade systems for someone. Some of the systems went back 5, 10 years with back testing. Some went back even 20 years with phenomenal statistics showing how well they work. And guess what? Each and every one of those systems ultimately blew out. When the market changed and when the system no longer fit the requirements in the environment, they all blew up and they all lost everything. So that's why I learned the great lesson that each trader should find their own way. We don't teach systems. We don't believe in them, actually. We really teach consistent methods and strategies so that you can make your own trading decisions. I hope that answers your question, okay? Someone says, I purchased your offer. Thank you very much. I really appreciate it. Thank you for your patronage, okay? How do we get your platform? Well, I would contact Pro Trader Strategies. Remember, they have that great offer. If you purchase the 37 video course, you will also get 50% off. And even at that time, that's still a great offer because the platform is extremely inexpensive at this time. They can help you with all that, Pro Trader Strategies. Just contact, you see right here, Pro Trader Strategies. I would highly recommend just giving them a call. There's absolutely no obligation, so don't feel as if you have to purchase something. Just give them a call and they can give you a quote, and they're there to work with you. Okay, and especially if you purchase something, they would give you a very good deal, in my opinion. Okay. What platform do you use, and will this work on TradingView? Well, I use our platform. Okay, so I get all of my setups and signals coming from my platform. In terms of will this work on TradingView, once again, that's a good question for them because they're in charge of all the tech support and all the data. I'm just in charge of the teaching part of the company. So that would be a question for them. Okay, that's a good question. But as I said, our methods work on just about all of the major trading platforms. So yes, but remember, you have the rules. You can experiment with it, see right now to see if it's worth it for you. Let me go back and see some other. Someone is saying that the website is not working. Could be overload. So just wait a little bit, or if you want, you can call up. Okay. So let's see. Let me see what else here.
I think that was for the previous presenter.
Okay. Okay. Good. Yeah. Someone's saying, yes, he is teaching you something for free. Take the rules and play around with it for yourself. I'm sure Mr. Primo will answer your question. Yeah. Thank you, Dennis. That is true. You're getting something for free. And this is the beauty. We, as a mentor, we always like, regardless of the presentation, we always want, just the way Dennis said here, we always want to give you something so that you can see for yourself if it meets your needs. If it doesn't, if you say, well, this isn't really my niche, I really don't like this type of trading, that's fine. You didn't have to spend anything because we're really an educational company. We're trying to teach you something so that you can elevate your trading. We're not a vendor. We're not just trying to pawn off something to you and for thousands of dollars and hope it works for you. We really want to educate you. You know, there's plenty enough for profits on a daily basis to go around for everyone. There's a never-ending source of profit. So it makes no difference if you decide to use our methods or not, okay? Let me just see. I'll take one more. You get the rules so you can apply. Yes, you get the rules so you can apply to any charting, right? One thing I do want to mention before we sign off here, I'll just take this last thing I want to state. A lot of people say, well, you know what? I haven't been trading that long, or I'm not used to this type. What if I have a problem? Every one of my students, regardless of they purchase a $37 method or a $500 or $1,000 course, you all are a student of mine and you all get my private email address. So it's the next best thing to having me sit next to you. So if you're having trouble or you don't seem to understand something, don't worry. You can always email me and I will contact you as soon as possible. So, you know, this doesn't go to a salesperson. My email address doesn't go to an assistant. It comes directly to me. No one else will see your email. So don't worry. You can share with me examples just to see if you've been paper trading, you're up and ready to actually apply real funds to the market. Okay. So that's another thing. You can email me before the opening, during trading hours, after the close. I even get emails on the weekend that I reply to. So you can contact me whenever you'd like. Okay. I'm there to work for you.